I'm Dawson Schmidt here with the latest stories and developments in this week's Commodity Roundup on Trader PhD. U.S. soybean processing remained robust in June, benefiting soybean demand. According to the National Oilseed Processors Association, domestic crush totaled 214.3 million bushels. That's up 16% from a year ago and well above analysts' expectations. And that was also a record for June. NOPA also reported that soybean meal production was a June record of 5.121 million tons. The USDA raised its soybean meal export forecast this month to reflect that strong demand and production. Soybean meal shipments are projected at a record due to growth in crush as well as higher consumption for key destinations. Soybean oil stocks, on the other hand, fell for the fourth consecutive month to 1.5 billion pounds, the second lowest June stock since at least 2010. Increased feedstock demand for biofuel production has helped draw down inventories since March. Taken together, the June crush data signals soybean demand remains resilient even as traders continue monitoring crop conditions and export demand heading into the heart of the growing season. Pasture land continued to experience poor conditions across some regions of the United States. Last week, the USDA reported that 30% of U.S. pasture land was in good to excellent condition. In contrast, 40% was in very poor to poor condition. USDA meteorologist Brad Rippey notes that much of the poor conditions are found in more western states.
We continue to see some of our greatest struggles across the states, comprising the Rockies and Great Plains, and we see numbers that are at or above 50%, very poor to poor, statewide, up and down from the Canadian border in Montana all the way to the Mexican border, Arizona and New Mexico.
Several states saw an increase of more than 10% in their poor ratings just from the previous week. That shows just how stressed some of those rangeland and pastures are in limited rainfall and heat. Other regions, such as the mid and southern Atlantic, are also dealing with dryness. Meanwhile, improvements have been notable in much of the Midwest. Drought is still an issue for some states. According to the latest drought monitor, 44% of cattle country was also under drought conditions compared to just 15% at this time last year. 38% of hay areas were experiencing drought conditions, up from 18% a year ago. Cash cattle prices experienced a sharp dip over the past couple of weeks. Last week, the 5-area average steer price dipped below $240 per hundredweight for the first time since April. That was a $20 drop in just 2 weeks. Wheat cash markets gave way to a collapse in futures prices. October live cattle traded more than $9 lower last week, hitting their lowest level since December. Box beef prices also have struggled to gain footing as of late. The choice cutout fell to $369 per hundredweight on Friday, down $14 from a week ago. That was also the lowest level since late February. Consumer demand for beef remains strong. However, University of Georgia Assistant Professor Will Secor says that there are indications of growing consumer headwinds that could weigh on the sector moving forward. Thanks for watching. I'm Dawson Schmidt, and this has been Trader PhD.